This video is being recorded at 11:44 p.m. Pacific time on Saturday, September 24th. So I thought I'd just make a video to go over some of the major market movements that happened last week. It was quite a volatile week for all the markets across currencies, across equities, even across the oil and energy markets. Um, so, yeah, first of all, last week there was a lot of central bank decision news. We obviously had the FOMC interest rate news on Wednesday, followed by the Bank of Japan announcing their news in the evening during the Asian session. And then the same day, we also had the Swiss interest rate decision. And even on Monday, I think there was a Chinese PBOC interest rate decision. So yeah, four major central banks announced their currency interest rate outlook for the future. I don't think any of these news events came as a surprise, though. Actually, all of the decided interest rates were in line with the expectations. But there was still volatility on some of these currencies when the news came out, especially when the JPY news came out on Wednesday. I'll get into talking about that in just a moment when I get into the charts. But the other unexpected piece of major news that came out this week was the Russian mobilization effort. So Russia has declared mobilization in their country, which is basically a draft. You've probably heard all the news by now, but this surprising piece of news came out on Thursday, and the markets didn't even really react on Thursday. They took until Friday for a huge wave of selling to hit all the markets. So yeah, things are getting very serious around the world right now. It looks like things are escalating. In fact, does seem to be how the market is interpreting the Ukrainian situation right now with this mobilization event that's coming. It certainly does seem that the issue is escalating in that part of the world. Okay, so let me look into the charts. I'll go over the currency charts first, and then I'll take a look at some interesting equity movements that happened last week as well. So yeah, I think this is the daily chart of Euro USD, but as I go through all these currency markets, I'll show the daily chart so you can kind of see what happened on each day. But keep in mind, most of the central bank interest rate decisions finished up on Wednesday, and then Thursday was the mobilization announcement that hit the news. So yeah, Euro USD, it was already in a downtrend in the daily and weekly timeframes from before. So on September 20th and the 21st was when it broke support. So this was Thursday. Thursday was a doji candle. It tried to go back up and test, but ultimately it fell down. So technically, this chart was already broken and on its way down. It's just the selling really hit on Friday on the euro and the pound pairs. I think on the euro against the USD, yeah, moved like almost 140 pips that day. So a lot of panic sellers coming out on Friday to drive this move. The euro is actually strong against the pound right now. It had a pretty good week last week. It moved about, 160 pips in all. But yeah, most of the move came on Friday as the pound tanked against all major currencies, including the euro. So yeah. JPY last week was surprisingly strong after the Bank of Japan news came out. So the way the market is interpreting this is the Bank of Japan has officially come out and said they will intervene to keep the yen supported at a certain level. So even though the interest rate met the expectations, it's the outlook that the market is trading off of. And this seems to be strengthening the JPY against all the currency moves. So yeah, that'll be more apparent as I look at the JPY against the dollar later on. But yeah, for the most part, the euro, it was rather weak against most of the markets. Swiss franc remained strong. As you can see, there's huge volatility in euro Swiss franc in the last 3 days of the week, moving about over 100 pips on all 3 days. So let's see. Okay, yeah, pound USD is where a huge move got made on Friday last week. So if you look at the weekly chart, it was clearly already in a downtrend, but this last week just killed it. I mean, it was like a 600 pip move this week. And how much was Friday? Friday was like like 400 of those 600 pips. So Friday there was definitely some panic in the pound. So yeah, this is just the 5-minute chart to see how it unfolded. All the selling came in London time and kept going well into the New York session here. So yeah, I'm actually not sure why the pound is weaker than the euro recently. If anyone happens to have a guess why, feel free to leave a comment with your feedback, but that is the case right now. The pound is weaker than the euro. So yeah, pound JPY, same thing. This was not a strong trend in the weekly time frame to begin with, but now it's retraced all the way back to the March breakout levels. Yeah, pound was weak against the AUD as well. It's fallen outside of this triangle range since several weeks ago at the end of August. But yeah, Friday was a new big breakthrough for this pair as well. Pound CAD, same thing. Huge move on Friday. Pound Swiss franc, same thing. USDCAD, okay, so this one, it came as a little bit of a surprise to me. It's a bit stronger than I would have anticipated. I did think it was going to stay within this channel. The USD has been strong in the last few weeks, but I thought maybe the Canadian dollar would catch up. But after this week's close, that is not the case anymore. It has decisively broke through the resistance level of this trend line, and it's actually broken through some of the highs as well previously. So yeah, this pair is strong, but it could retrace next week on any day. So yeah, just check for that. Okay, USD against the JPY. This is the, I'd say, one of the more important markets to watch these days because it's made such a big move this year. But yeah, the weekly is looking like it's running into resistance at the 145 key level area. So maybe the traders are hesitant to move USDJPY past this point because of the news from the Bank of Japan. But as far as the weekly, after the news came out on Thursday, it was a bit volatile, but still bearish overall. And then Friday, because of the geopolitical news breaking, the USD was able to make a little bit of a comeback. But overall, USDJPY could, it is in a range right now, and it could be set up to break lower. But yeah, it's not certain which way it'll break out still. So dollar Swiss franc, it was bullish last week. So even though it's also in this trend, large trend downwards on the weekly chart, seems like it got supported halfway this time and it's testing the upper bounds. So you'll have to see if it's able to break out of this descending channel, kind of like USD Canadian dollar, or will it continue to go down and trade within the channel here? So yeah, AUD USD was also selling off last week, just continuing the trends from the weeks before. But yeah, the US dollar did push a lot of the currencies past the breakout areas. And then I don't think any of these other pairs are in a trend. AUD not trending. AUDJPY is not really trending on the daily chart. AUD Swiss franc, it looks like it's breaking out, but yeah, I did find a little bit of support in the .642 area. Next week there may be continuation selling. Yeah, it's kind of in like an expanding funnel shape in the daily chart since September 14th. But the Friday candle was bearish, so it could continue downwards. CAD Swiss franc, it's also testing support, but it's been in a range for the last several days. CAD JPY retraced, like many of the other JPY pairs. Same thing with Swiss franc JPY. And I'll mention one thing around the JPY news. So bringing up the calendar, we see that the BOJ interest rate came out on Wednesday at 8 p.m. Pacific time. So I was actually watching the markets as this news came out. And it actually looked like, a lot of the JPY pairs like USDJPY was on the verge of breakout, but then it got strongly rejected. So let's see. Yeah, this is the 1 hour chart. So you can see all this buying on September 20th, 21st, and the first part of the Tokyo session on the 21st. There was a lot of buying, and it was actually going up to test the daily or the 4 hour high right here. And then it got rejected strongly as soon as the news broke out. And just to point out maybe a logical reason why this happened, as I mentioned earlier, a lot of the JPY traders came out and bought JPY after the central bank news. And the reason why that happened is because, if you can see, USDJPY and pretty much all the JPY pairs have been trending since February of this year. This whole year, Western central banks have been adding interest rates, whereas Japan's the only one that's kept their interest rate stable, which is why you see this trend against the JPY pairs here. But if all of a sudden news comes out that the Bank of Japan is supporting the JPY, a lot of traders are probably taking profits to see what would happen to the JPY trends. So most traders don't want to be in the market right now, and if they're selling, if they're buying back their JPY trades, that means they have to sell the currency they bought using their JPY profits. So the dollar was sold very heavily on Thursday. It even impacted some other cross pairs like Euro USD or Pound USD, any USD denominated pair. If someone is selling dollars on a certain day, it'll drag down those pairs as well. So that's just something I noticed. It might come in handy again if there's an overextended market. And then all of a sudden, maybe some traders have to think about closing their positions. So you might see that pattern happen again. Okay, but yeah, for the coming weeks, the breakouts are quite clear on some of these charts. Like Euro USD and Pound USD, I believe, are making new lows since quite some time. This is like a 2-decade event this year in this kind of sell-off. So we've clearly broken past a lot of supports on Euro USD. Same thing for Pound USD. So yeah, technically on the charts, these trends could be set up to go much further, similar to what we had in February this year. Now that the geopolitical news is getting even worse, more people are urgently inclined to transact out of the European currencies. So yeah, there could be retracements in the next few days, but overall the trend is still strongly down. So those are all the currency markets. Let me go over some equity markets that I thought were interesting last week. So because of the geopolitical news, pretty much all markets are down. This is the US 500, S&P 500. It's testing support now, made back in June. So yeah, as I said previously, it looks like this slanted head and shoulders pattern was broken to the downside. It retested early in September, but it got resisted and now it's going down again. So we'll see if the equities markets find support for some time at the previous level or if they just go down continuously. So this is the NASDAQ, similar setup. A little bit less bearish since it didn't make it as far as the US 500. And then the Dow US 30 is, I think, the most bearish. It's actually just closed just below the previous lows. So you could say this is a breakout. Yeah, if you look at the daily chart, it just barely closed above 29,665. So yeah, if traders come in on Monday and see some of these signals, they might decide to sell on the open, and it could drag these movements down further. Just to give you an idea of some of the individual big tech names, this is Google, clearly broke support on the weekly chart. Amazon, this is still yet to reach the previous support area. Apple, this is probably the strongest tech company in terms of technicals, but even this one is starting to break downwards out of this previous Kumo area. The week before was a bearish candle, and this week the buyers came in to try and support it, but they ended up back at almost the same position. So I think next week or the weeks after, Apple is set up to go down as well. And this is kind of note because it is the strongest tech company if you just compare the technical setups. Microsoft clearly broke support. Netflix is probably the weakest FANG stock. Facebook also broke support last week, and then this week was more of a continuation move. But yeah, it could go as low as 122 for Facebook to, yeah, this was the 2018 low during the issue with China for the trade war. So yeah, it looks like it's going to break the pandemic low and possibly might go down to the 2018 low. Semiconductors, this is the SOX index. It's very similar to the US major indices. Nvidia, this is also broken past support, made back on July. AMD, same thing. And then yeah, the financials have been weak for some time, but just to give you an idea, this is the Finex ETF, and it is, yeah, just broken past support as well. So this is the most bearish sector out of all the tech equities so far this year. So no surprise, it's continuing the down move. Visa, the blue chip financial stock, this is also breaking support. This last weekly candle was able to close below all the wicks made previously this year. So even Visa looks like it's getting dragged down. MasterCard, similar picture. American Express, even weaker. Discovery, also in a downwards channel trend. But yeah, a lot of the Enterprise SaaS companies are going down too. A lot of these have good selling setups. I think a few that I saw that were pretty good were SAP. Yeah, this one has been very bearish this last week. Salesforce, this one has a nice setup. It's just broken past all the previous supports here on the daily chart. You can see this is one of those nice slow breakouts where you can catch it in time. It's not like a volatile breakout. It could retrace, but you know the long-term sellers are with you if you look at the weekly or the monthly charts. Even the monthly, it's assuming it closes like similar to this by the end of this month, it's going to break past the Kumo and eventually twist it to make the long-term monthly trend go downwards. Yeah, what other companies are there? Oh yeah, let me check the energy markets. Or actually, I'll look at some of the traditional blue chip stocks first, maybe. Where's that one? Okay, so yeah, the Russell 2000 is similar to the other US indices. It's also testing the previous support level. 3M is actually broken past the pandemic low made in March of 2020. Berkshire, they are also testing support, which looks like it's going to break. So if the Berkshire goes past 396692, the Kijun-sen on the weekly trend, that is the mid price of the last 26 candles, it's going to go down and also break out of the Kumo area here. So yeah, even Berkshire is starting a weekly downtrend, assuming it's not supported here and it breaks out. Some of the grocery stocks are also about to break downwards. This is Walmart. It only just recovered from a huge sell-off in May, and now it's looked like it's breaking down again. Costco is even getting sold off heavily this last week. Target is even more bearish. Kroger, a lot of these grocery companies that were able to keep their gains because they're not affected by inflation as much. They just mark up their prices. Even these are starting to slow their trends on the weekly chart or else go downwards. This is Kraft Heinz also testing support here. So yeah, Coca-Cola, they are about to form a head and shoulders pattern. If it breaks, yes, $58. I noticed some of the transportation stocks. I was looking at similar stocks to FedEx following the earnings report last week. This is just the Dow Jones Transportation Index. It's more bearish than any of the US indices. So yeah, the transportation is down. A lot of airlines, parcel delivery services are included in this index. UPS breaking support, going down. FedEx had a huge sell-off last week, and this week was more continuation selling. Okay, this ticker CAR is for Avis Budget Group. They are a rental car company, I believe. And this is one of the best setups I've seen in the equity market so far. So this is the daily chart, and if you see, there is a huge wedge pattern on the weekly chart, and it is breaking the 140 level. Yeah, 140 or 144 or 41 was the previous low. So actually on Thursday it broke out already, and then Friday was some buying back, but even then it closed technically lower than the Thursday low. So yeah, this one is a very good setup. It's very clean. If it breaks through this level, it's almost going to have no resistance, or sorry, support until the $95 to $73 area. And even then it might go down for quite a bit. So yeah, this I was not watching this company before, but it looked like it had a huge run up in 2021. Yeah, everything since the pandemic was going up, and then finally it had a blow off top buying in November, and it hasn't been able to recover since then. So yeah, this is one of the best setups that I've seen right now. Yeah, what else is there? This is the Airlines ETF Jets. This one has broken past the previous support as well. So yeah, you see the pattern here. A lot of the weakest companies are going towards the pandemic lows again, when everything was uncertain and going very badly in 2020. A lot of these companies, they didn't even recover all the way, and now they're going down again. Let's look at some of the cruise lines. This is Carnival. It's at the same low made back in 2020. Royal Caribbean, similar situation. Norwegian, also going down. But yeah, it doesn't look like the leisure or transportation sectors are doing very well. Even the airlines that have started to reopen routes, their stock prices are not doing so well. Yeah, so a lot of bearish setups in the markets across all different types. Let me check the energy markets, what happened there on Friday. Okay, so yeah, crude oil. This is the crude oil price on the NYMEX. So this week it has more selling, more bearishness. It broke the doji made 2 weeks back. So yeah, Friday was a continuation move for a lot of these markets. This is Brent, same thing. XLE is selling off as well. Yeah, I don't know if natural gases might go up again, pending the Russian news, but it has been consecutively bearish for several weeks now. But yeah, keep in mind this is the futures price. It's not, may not always be indicating what is going on behind the real physical market, because these are futures. But yeah, this is the US natural gas price, the Henry Hub. In the weekly chart, it's not so bullish anymore. The Dutch natural gas looks like it's stabilizing around the 185 level area, so it may go into a range for the next few weeks. Uranium, URNM, has also been bearish this last week. But yeah, the end of last week was mostly panic, so all of these markets are selling off. It'll be interesting to see what the Monday open brings across all these markets after traders have had a couple days to digest what's going to happen in the Ukraine area. So yeah, I covered most of the major sectors, and I will come back with an update next time.